What is good, guys? It's Rey-Jay back with another video, and in this one I wanted to break down what's going on with Tesla, SPY, Nvda, the QQQ, and a couple of other tickers. I'm also going to talk about some new data that just came out that's causing the market to pump again, and that's very ironic considering how overbought the market is. We're going to be breaking this down in more details in just a few minutes. Let me first say that I am not a financial planner. Take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you are guaranteed up to 5 free stocks. This offer ends in just about 12 days from now, so check it out before they run out. Anyways, let's break down what's going on with the market. Looking at SPY, this thing is continuing to pump like crazy. We're now at 433, and that's not what I was really expecting yesterday, looking at some potential sell signals. But the market has tried to invalidate those this morning. It's continuing to pump, which is just pretty crazy. I mean, the market's very overbought. SPY was at 409 just like last Friday. Now we're at 433, and it's continuing to push and push and push. So why is the market up again in the pre-market? That's because the unemployment data came out hotter than expected. We got a 3.9% unemployment rate versus the consensus in the forecast of 3.8%. Non-farm payrolls were lower than expected, and everything else was very close to expectations in terms of data. As a result, the market likes the fact that the unemployment rate was a little hot. And you can see this right here. The Dow futures adds 100 points after a soft jobs report has sent yields lower. And when yields are dropping, the stock market is pumping. And on top of this, many analysts are saying that there's less than a 20% chance that the Fed is going to raise rates again this year. So because we're getting weaker jobs numbers, the stock market is celebrating, the stock market is excited, and we're seeing the market pumping a little bit more. Now, when it comes to some news that came out, the market is once again starting to pump just like it was in the summer. Apple, however, is down after we saw the fourth straight quarter of declining sales, and revenue is down less than 1%. Apple was down, but I was trying to rebound after all this data that came out. Besides that, we're starting to see more and more estimates out there about how Americans are expected to spend more this holiday season than last. But you can't forget that Americans are still swiping those credit cards. Borrowing costs are just continuing to soar, and this could dwindle spending power moving forward. For now, we're going to be waiting to see how this affects us. And Starbucks also revealed a new growth plan for the rest of the decade. That's very good for them. Anyways, that's it for the news for now. I want to break down something big. So later on during the day, we have some more data coming out. At 9:45 a.m. Eastern Time, 15 minutes after market open, we have the PMI reports for the services sector. And then at 10 o'clock a.m., we have more services data coming out. So we're going to be watching to see how this affects the markets. If this pumps the markets by 10 o'clock a.m. Eastern Time, the market could continue to squeeze. If it causes the market to pull back, we could retrace the filler gap all the way back down towards 430. And I do feel like that's going to be on the table. But like I said, guys, this market is absolutely insane. I was not expecting it to pump this hard for this long or in such a short period of time. So here's some levels to watch for in SPY. Right now on SPY, we have this 433 resistance. If we break this, you have 434 being the next level historically right over here. And if we break that, we have the next level at 435.12 being the next level to watch for. If that breaks, then we have this 437 area coming next. Now, this market is insane. Like I said yesterday, I wasn't expecting it to pump this hard. I felt like we were very overbought, and also Aapl was starting to drop, but now Apple's starting to rebound, and SPY is making attempts to try to get back to 433. Now, if the market were to keep pumping, you want to see it, if you want to be really bullish, you want to see it try to get above 435 and hold there. However, the higher we go, the riskier it becomes because we have more and more resistance coming, and SPY is just becoming more and more overbought, right? If you look at the 30 minutes time frame, SPY has an RSI currently at 84. It's still forming this bearish divergence on the 30 minutes time frame, which makes me suspect that it might kind of like pump and then come right back down to fill this gap. But it may not be a massive pullback. It could just be a minor one that's coming. But I'm not going to call any pullbacks until we get confirmation of a move to the downside. So far, there's no confirmation. It's still trying to push in the pre-market. So what that tells me is just wait for the data to come out for the first 15 and 30 minutes after market open, and we will see if SPY ends up retracing or not. If SPY comes back down and we lose 433, watch support at 431.5. If we lose that, I expect it to come all the way back down to 430. And if we lose 430, watch 429.5, followed by 429 flat. We have a lot of support holding this up now, but because it's so overbought, I do anticipate it might kind of like pop and then maybe drop. But just to be safe, we're going to be watching these resistance levels. Don't forget, more data is coming out, so we'll see if this causes the market to pop more and then drop, or if it just drops from here. So far, it's holding up very nicely, so we'll see how it reacts to data. When it comes to Aapl, this is a little ironic because Aapl dropped quite a bit yesterday and it's trying to rebound at 175, but it's starting to reject right over there. If we're bullish, you want to see Aapl break and hold 175. If you're bearish, you want to see it reject and come back down towards this imbalance at 172. And if it loses that, we could be watching for 170. Now, I was anticipating some more downside possibly for Aapl, but it's just to be safe. We're going to be waiting to see how it reacts to all the data that's coming out for the first 15 and 30 minutes for the PMI and ISM services data. If Aapl rejects, there is going to be a risk of it coming back down to 172, and that could slow the market down. But as of right now, it's kind of hovering between 174 and 175, so we'll just have to wait and see. But if we end up losing 173.5, that's going to be a bearish signal. It could come down to 172 all over again, which could slow things down. But right now, the market is still overbought, and we're just going to be watching to see how it reacts. As far as Nvda goes, Nvda is currently at this. It hit 440 to 442, but it's coming back down a little bit. Now, I just wanted to note that Nvda right now, as Nvidia is trying to push, we have a bearish divergence developing, but there's no sign of Nvidia slowing down just yet. We also have a gap, kind of like gapping up right now. So we have like this gap to 435 that could fill. So we're going to be watching this resistance right here. If Nvidia manages to break out, if we manage to get above 442.5, watch 444, and if that breaks, it could push to about 448, this previous support becoming resistance, and then 451. Those are some resistance levels to watch for: 442, 444, and basically very close to about 451. For support, you're going to be watching 438, 435, 430, 425, 422.5, and then 420. My gut is telling me it might pop a little bit more, but we're going to get a big reaction to all this data, and it might cause Nvidia to come back down and fill its gap back down to 435. If it loses that, it could get very close to 430, then bounce, but continue its range trade for the time being. So I'm anticipating like a pop and drop, but just to be safe, watch and see how it reacts to all the data and watch your levels very carefully. When it comes to the QQQ, we're seeing something similar going on. This thing is pumping again to about 364.5, but it's still super, super overbought. I mean, this is pretty wild. It's pretty insane to see the QQQ this overbought. We just reached 365. And remember, this thing was all the way down into very low 340s just a couple of days ago. So we went from the 340s all the way up to 365 in just a couple of days, which is pretty insane. And we have a slight bearish divergence developing again. So I anticipate it might kind of like pop and drop, but just to be safe, we'll see how it reacts to the data. So if it manages to break 365, watch 366.21. If that breaks, we could get very close to 368. If we reject off 365, there's going to be, the next support at 364. If we lose that, watch 362.25, 360, 358, and other levels like that. Now, with this bearish divergence developing on the chart, my gut is telling me it's going to kind of like pop a bit, maybe cool off a bit to fill this gap. And then we'll see if the buyers defend 360 or not, or at least 362. That's where this gap is from, like right here. So we're going to be watching it very carefully. I want to be very careful simultaneously because, like I said before, we're very overbought and the market's risky at these levels. But we'll just have to wait and see. As far as Tesla goes, it's continuing to pump. It's looking like it's trying to get this 222.5 area, if not 225. But be very careful once all the data is released. We're waiting for PMI to be released, and we'll see how that affects Tesla. Now, if Tesla gaps up, by the time we open, there's going to be a risk of it coming down to fill its gap back down to this 217 area. Then we could see Tesla retest 215, maybe try to bounce. So we could see a move like that. There's a slight bearish divergence again, and we're just so overbought, guys. I just think that's a little risky. We've pumped and pumped and pumped and pumped with basically no pullback, and it just is not the healthiest of moves for the market. Keep in mind, Tesla was at 194 just on Tuesday. On Tuesday, it was at 194. Now Tesla has been pumping with the market. It's currently in the 220s. It all happened within a very short period of time. And with some bearish signals potentially developing, I think that we're going to be watching 222.5. If we break this, watch 225 on Tesla. If we get above that, watch 228. So this zone right here. And if we end up breaking this, 230 is going to be on the table. If we're bearish and we're watching 220, 216.8, followed by 215, 212, and then 210. My best prediction would be Tesla kind of like pops a little bit more. We either stop at 222.5, maybe up to 225, and then we see a rejection. We see Tesla come back down to fill this gap, and then we bounce off like 215 to 216 and just kind of hold up. But just be a little careful because we have this resistance right here near 225 to be watching for. And Tesla, it's still trying to hold up, but don't forget we have more economic data coming out that could affect this rally. So just be very careful. Know that the market's very overbought. It's risky, and just watch these levels very carefully. If Tesla manages to break and hold 225, then it could just continue to push and try to go up straight to 230. But I don't really predict that's going to happen right now. I mean, it's going to depend on all this data and the reaction we get. So just be very careful and be very mindful of that. All right, so that's it for now, guys. Have a great day. Watch these levels carefully, and just know, once again, the market's very overbought. So you want to be careful in a market like this. All right, thanks again, and peace out.